The capital market is a segment of the financial market where long-term securities such as stocks, bonds, and other financial instruments are bought and sold. It serves as a platform for businesses and governments to raise capital by selling ownership stakes or issuing debt securities to investors. Here are some common types of capital market instruments. 1. Stocks, equities. Stocks represent ownership shares in a company. By purchasing stocks, investors become shareholders and have a claim on the company's assets and earnings. Stocks can be traded on stock exchanges, allowing investors to buy and sell shares of publicly traded companies. 2. Bonds, debt securities. Bonds are debt instruments through which borrowers raise funds from investors. When an investor buys a bond, they are lending money to the issuer in exchange for periodic interest payments and the return of the principal amount at maturity. Bonds can be issued by governments, municipalities, and corporations. 3. Preferred stock. Preferred stock is a type of equity instrument that combines features of both stocks and bonds. Preferred shareholders have a higher claim on a company's assets and earnings compared to common shareholders. They typically receive fixed dividends before common shareholders but do not have voting rights. 4. Mutual funds. Mutual funds pool money from multiple investors to invest in a diversified portfolio of securities managed by professional fund managers. Investors buy shares in the mutual fund, and the value of their investment is based on the performance of the underlying securities. 5. Derivatives. Derivatives are financial instruments whose value is derived from an underlying asset, index, or benchmark. They include options, futures contracts, swaps, and forward contracts. Derivatives are used for hedging, speculation, and managing risk. 6. Rights issues. Rights issues occur when a company offers existing shareholders the right to purchase additional shares at a discounted price. This allows companies to raise additional capital from their existing shareholders. These are just a few examples of capital market instruments. The variety and complexity of these instruments provide investors with a range of investment opportunities and strategies to meet their financial goals and risk tolerance. It's important for investors to understand the characteristics, risks, and potential returns associated with each instrument before making investment decisions.